Hello, ladies and gentlemen, and welcome back. Well, the question many people have sent me today is, Tom, was that the beginning of a turnaround story on these markets? Well, it certainly could be. It's the first structural change on the small time frames that we've seen in about 300 points, and we'll go through that later on today's video. But it was more than just that. It was also the FOMC meeting minutes that we need to discuss and core retail sales, which really showed that maybe the Fed has a little bit more work to do. The interest rates were going up, yields was really increasing for most of the session, and of course we saw the swing off the key zone. What happens here is so important. So stay tuned as we break down the markets around the world and really get deep diving into what's going on right now, because there's a lot to discuss. See you soon. So welcome back everybody to the daily show where we talk about markets around the world. Let's get started by discussing smart money versus dumb money. We always bring this one up. It's always important to note. Got a little bit of a curve down here on dumb money. So the market started to drop and dumb money's confidence started to go down a little bit straight away from that. We already know smart money are well ahead of them though, with starting to really see that this could be something rolling over on the SP 500. We've got a key pivotal point here that we'll be discussing soon. This indicator helps us, but also so does fear and greed modeling. We know that greed hit almost all-time peaks on the last couple of years. Often when we get these kind of peaking zones, we do see pullbacks in markets. It's what we kind of now expect around this area, should the market act as technically as it usually does. These kind of levels do help us. What other things help us? Well, this is one of the best summer rallies pretty much ever. I mean, it's not as good as back here in the 1930s. Imagine that, an 80% plus rally over a couple of months. Wow, it's almost mind-boggling that was even possible. But this is what markets can do. Expect the unexpected. But it's a big one, and there's not many out there on record that have ever done these kind of moves. Therefore, there's usually a pullback right around the corner into some of the weakest months of the year, being, of course, back end of August, September, October. Never forget, September is the worst month by human record, 200 plus years in the stock market. Intraday retail investors always know kind of the prey. We are the prey. The stock market preys on us. They take advantage of our human emotions. Obviously, retail traders, you can see here the volume is placed mostly at the start of the day and the end, which is similar to Wall Street, but there's just so much more emphasis on the start of the session being when most people do trade. There's little surprises there. Of course, it makes sense. Another one I want to bring up is why this is such an important level. There's so many stats hitting the zone on the stock market right now. 37 trading sessions. We've hit about 40, so we're right on around that average. 8 to 14% range of pullback. Again, it's a little bit bigger this time around, but still within that zone. And more importantly, 67.7% pullback in the actual movement from top to bottom of the previous move. That's the important one here. We hit that almost perfectly over the last couple of sessions, and that's led to really where we were yesterday, which was a little bit more bearish on the market than usual. In fact, I pretty much wasn't even bullish at all in the last video for good reason, I believe. It was just too much of a critical level that we've been looking at. Yes, follow the trend. Were we going to see a turnaround in structure? Luckily we did, and we'll talk about that later. Fed minutes, what went on? Well, here's some key points that a few basically pundits out there have put together. I think it's pretty much in line. Most people expected the Fed to come out a little bit hawkish. They did. Some notable things here. Participants agreed there was little evidence inflation pressures were subsiding and that it would take considerable time for the situation to be resolved. So, of course, here it also says participants emphasized that slowdown in demand would play an important role in reducing inflation. Okay, for sure. And that, of course, the strength of the labor market suggests economic activity is stronger than the implied Q2 numbers. So, again, potential here that the US economy is a little bit stronger than they expected. To me, that just means they've got a bit more work to do. And with the UK inflation number coming out like it did, that was wild. They got a 10 handle, 10.1% inflation year on year out of the UK, expected to potentially go up to 15%. That's what some people out there are saying. I think it was Citi. That's crazy to me. What else is going on though? Target probabilities for September meeting, of course, pretty much split here between economists. Let's go over here to S&P 500 following the declines. We know we're on a model here. In general terms, based on the data, the statistics that we have right now, we are at a pivotal point. We all expected the pullback to happen. Remember, we were here last week. We went up a little bit. Now we expect the pullback. Will we get a pullback followed by huge bullish demand? Or are we going to get a deeper pullback based on many of the other metrics that we've seen over time, pushing us back down near those lows, or possibly even a new low, a new statistical kind of thing that usually doesn't happen with these kind of breadth markets? Here are the two concepts that we have based on the data at hand. What about midterm election years? No one's still talking about it. I don't know why. August, September, October, specifically the next 2 months, tend to be highly volatile. I just believe it's worthwhile bringing in, and of course, it's a bit of data that we're doing. We also have, of course, COVID being a concern and lockdowns in China. So we're seeing that number get up. Of course, we don't really know what the number is. We are seeing lockdowns starting to appear. We're also seeing some particular areas in China being locked down in general. I don't know why. And that's, of course, going to potentially affect chips as well. All of this doesn't really help the inflation story. So we've got August and September. These are the 2 weakest months in midterm years. We also have some of those problems coming. There could be a lot of issues on the horizon. Let's just have a look at the beat rate here. You'll notice it's 60%, beats 2,297 versus misses 1526. We're still in earnings season. If you're interested in any of these companies, know that they're coming out with their results here moving forward. And let's get into the charts, and let's actually get started charting this analysis. We'll go through some key lead indicators, then we'll go into, of course, some commodities, jump into some stocks, indices, and finish up with crypto today. Let's begin with the VIX. Okay, what's going on, guys? Well, it's back at 20. There's not much else to say about this. This was where we launched, of course, bearish action a few times in 2022. We had the February 10th point. We had the April point, which is kind of similar to where we are right now. And of course, we're in August at the 20. Most people see 20 as being bullish or bearish. Underneath the 20 is a normalized kind of market. Above the 20 is a bearish or very volatile market. So of course, VIX traders are looking for a spike in VIX at this point. US 2-year, well, it jumped into the UK event, and then as the FOMC event came out, it jumped back down. Basically ended the day around the same point, 3.266 on the 2-year. The 10-year went up slightly as well, 2.87. So both yields spiking. Again, the stock market really hasn't come down through any of this ramping so far. The low point here was the 1st of August. We've pretty much just gone bullish since that, yet yields are higher, signaling to us that the bond market doesn't quite agree with the stock market's move. That is important. If you are interested in bonds, a lot of people are talking about TLT, that is long-term yields. Remember, if you believe that we've hit peak inflation, that we are going to see maybe yields on the predictions start to drop over time, then TLT could be one of those ones. Left shoulder, head, right shoulder from an analysis standpoint. It's a long burn and a slow burn, but if US 10-year yields do drop, which I suspect they will over the coming months, then of course we expect TLT to do fairly well off that. Let's move into some other things. What about dollar index? Well, the US dollar is kind of holding its own now above a key point. I'm on a 15-minute chart here because I want to look at the structure. We know that we have a fairly big defended area. Somewhere around 106.30 seems to be where the bulls continue to buy the US dollar and the bears might bust it down. A few people have sent me this saying today, well, what do you think about this, Tom? Do you reckon it's kind of like distributing? It could be distribution. It could be an accumulation before the next move. We do need to remember it is above certain things. It's above the 20 moving average. It's above our box that we discussed. And we now have daily lows at the same level. So we know that if it gets through this zone, that is, if it goes below 106.31, unless it's just like a quick swing that instantly reverses, it's most likely going to spell weakness for the US dollar. So for strong US dollar fans out there, we want to see this thing continue to go bullish. And at this stage, the trend is theoretically up on the smaller timeframes. What does that do for gold? Well, I'm net positive gold. Of course, money flows coming back into this metal. I think that people are probably misrepresenting gold over the next coming months. At least that's my opinion. We'll find out whether it does work out. And I am expecting weakness further to go on here with gold. I'd like to see it back down at 1755, which is a long-standing level. And if we break through 1755, the next zone's around 1720 to 1715. And that's where I expect the really big players to potentially pick up gold. In fact, I kind of expect it to go something like this, potentially down into that zone. This would be a huge zone for us. I do hope to be there. We've sent alerts for it just in case. And of course, I am long-term on gold. However, at this point, I still think the weakness could be there, especially if the US dollar goes strong. We mentioned on oil that it's tough at this stage. We got down to the previous high, weekly high. We know that we're at the 61.8 to the 66 GAN numbers here on the fib pullback. And really, it's sitting at support. So it's tough. It's sold through that 94 range, finally got underneath it. And now if inflation is going to come back and problems are going to come back, you expect oil to go up here. I'm kind of indifferent towards it. Obviously, longer term, I have the plan of 65. That's a very long-term plan. Like, it's got nothing to do with the next couple of months. Should we go down to the smaller time frames, if you're feeling bullish on something like oil, then you really need to see it break past 90.70 now with the kind of structure that we've got. And then it would move to the next level, you would think, which would be around 95-ish on the high. If we get through that, well, then of course you can expect higher points. Big support zone, certainly interesting. Continue to watch oil. It's becoming a big problem in Europe. As we saw, natural gas is just completely wild and bonkers, though I don't really like trading that one. They call it the Widowmaker because it really is. It's terrifying and it's a very scary trade out there. So you got to be careful about natural gas. Tesla, on the other hand, what happened there? It did okay. It actually held up better than you'd expect. Only down 0.8% on the session. We're still in the consolidation range. It's really more about the stock market, I think, than Tesla at this stage. If Tesla breaks out, be careful of the 960 kind of false break. But if it did break to the above side, we'd be going towards 1,050, unless it was one of those quick false breaks. If we get underneath and we start moving down, where's the support level? Where are the buyers? Somewhere around 840, 850 for Tesla. So it's kind of in the weakness at this stage. I'd expect Tesla to move down to somewhere around 840, 850. We'll find out whether there's buyers there. Apple, it's unstoppable. This thing held the market up yesterday. Another upgrade for Apple. I can't remember who did it, whether it was Wedbush or something, but another upgrade putting above $200 for Apple moving forward. This thing is a locomotion machine. From the lows, it is now at the peak, 36% up. Good if you've owned Apple. Weird if you haven't though, because that's a big run with very shallow pullbacks. What do you expect? Usually a bigger pullback. Now, at this point, I don't know if I like Apple anymore. I'm certainly watching it though, because if it turns over, we all know how it goes. The rest of the stock market comes with it. This is the powerhouse. If it fails, the rest goes with it. And it's like a domino effect. Of course, we don't have that yet for Apple. We'll keep updating you as we find out more information. BBY, or BBBBY, Bed Bath and Beyond. Yep, went back to this level. I discussed it as resistance. Obviously, I'm not trading this. I don't have any interest in it myself. I don't like the meme stocks. But there seems to be a fight going on between Kramer and Wall Street Bets and some other big players out there. It's interesting to watch. And what it shows us is that, of course, people are mass speculating on the markets again. This is similar to what we saw over here in March and, of course, April. And we know how that played out. It played really badly on the stock market. It's similar to what we kind of expect potentially to happen here with Bed Bath & Beyond. You've got to be careful on this one. Have a plan. If you don't have a plan, you're just going to get burnt left holding a stock that's probably worth $6. Let's move over to the DAX. What's going on over here? Well, it came off the trend line. Bam, bam, bam. Exactly as we kind of expected, exactly where it was meant to happen. This was the weakest of the markets, and this is important. Too many people out there in the comment section are like, I'm shorting Apple, I'm shorting Apple. I don't understand it, guys. Why do you short Apple over shorting a crap stock? Apple's not a crap stock, it's a good stock. And I'm not saying the DAX is a crap, index, but it's certainly weaker than America. Always ask yourself this question. Would you rather, if they were the same price and they dropped the same amount, would you rather buy the US market or the DAX? And if the answer is you'd rather buy the US market, then when things go bad, shouldn't the DAX drop more? Just something to think about there. Of course, cross-market correlation is a big thing. When there's weakness in the European economy, such as there is in Germany, obviously we've got the natural gas problem there. If the markets in the US turn over, the DAX will follow. That's why it did a much worse percentage for the session. There's more to it than that, but of course it's an interesting point. Move over to IWM versus the SPY. We've been watching this one. Small caps versus the big caps. What happened? Weakness in the small caps. They fell off. Do we move all the way back down to this level again? What we found as a correlation between the drops in 2020 and the drops, of course, in August of 2020 and recently. 0.44, something to be watching, certainly a chart that I would have on my screen. What about bonds? High yield bonds, big junk bonds. Yep, they've dropped as well. They dropped way more than you would expect them to. So again, the bond market's like, yeah, I'm out here. Peace. I'm gone. It's falling off a little bit more. I don't really like what we're seeing from the bond market here. Remember where we were. So this was, of course, the May high. The bond market hasn't been correlating with the stock market in recovery. That's something I don't like so much. The bond market tends to be smarter. At this stage, still a bit of weakness here in bonds. We'll find out if they're right or if they're wrong, but certainly a key point to be watching. Look at the high yield. Let's move over to the Nasdaq. Did we see a turnaround? Yes, we did. We had a higher peak. We got a lower trough. We recorded this and talked about it in, of course, our private community, free 7-day free trial if you're interested in joining that. It was a great video, certainly worthwhile watching. I noticed a lot of you were absolutely smashing this one with perfect entries on the Nasdaq and the S&P yesterday. Congrats to some of you. It was pretty sweet. So we saw that FOMC meeting minutes. It came out and probably grabbed liquidity around this point. And then, of course, it's weakened off. A new low exposes 13,300 and then potentially gets us back down to something I think a lot of you would be pretty happy about, which would be a 13,000. Remember, we left a gap that's massive on the real market over here. There's a big gap sitting there with the chance of it coming down. Let's move over, though, to the SP500 because this is where we really get a good idea of what's going on next. Downward trend line, tick. 200 SMA, tick. Crazy little swing fail here. Absolutely tick. Did we see a rejection off these zones? Yes. Have we got a fully fledged sell-off in the market? Not really. I mean, of course, it created a little long leg doji, so it's like equilibrium or it's found a point that it's pretty happy with. But when we go down to the futures market, it tells a little bit of a different story. Peak, trough, higher peak, new trough. Do you know how long we've been waiting for something like this? I mean, it's been technically long for like 300 and something points. Okay, if you're following it technically, perfect. But it's interesting to see that we haven't actually had one turnaround event. We finally got the smallest of small ones. Are we through the 4250? No. Did we certainly see a small turnaround? Absolutely. We came back again. Many of you guys smashed it in our community. That was fantastic. And we'll find out whether the next session actually gets the bears back involved, because if the bears keep coming through, then we've got a nice little sell-off potential here. Next stop, 4,200. Just above 4,200 would be the next stop. Underneath that, fill the gap. 41.22, 23 is where the gap is, and that will all coincide well with the Nasdaq. Some exciting stuff here on the charts, and yes, I'm probably leaning bear here. I lent bear massive yesterday in the video. It's because we're just at too many points. Am I afraid of being wrong? You can't really be afraid of being wrong. It's just a trade. You lose a few trades in a row, of course. Sometimes, even if it's a 70% accuracy, sometimes you're going to lose some trades. So if it goes up and above 43.25, would I expect that? Not really. I wouldn't expect it. But if it does happen, then we may move to 44.10. You do need to look at the bull case versus the bear case. I understand a lot of you are longer term investors. You don't care about this. Why do you? You just look at it as more opportunity for a low. First turnaround though, in hundreds of points for the stock market, a critical zone. Let's move over now to understanding maximum pain. I'm going to refresh this. So I want to leave it on the previous session. 407 was the previous session. Look at this when we scroll over here to the max pain, 410. And also have a quick look here at the level. So max pain was actually created at 427. Some of the puts got through, but 420, all those poor people that loaded up puts got no payoff. You didn't get paid, guys. 423 and 420. You lost. You didn't make any money. Always check this out. It's going to be a big one here. This is the huge expiration, the 3rd week expiration. The main puts lie at 390 and 400 and 405. So there's a real chance here that we actually drop off leading into Friday. If it's going to happen, Thursday and Friday are going to be the weekdays because that's where the market would like it. Remember, who writes the options? Wall Street does. Who would like to make lots of money? Wall Street would. So they like to push down on these 3rd week options expirations. It's no guarantee. It's just one of those things that you can bring across with your analysis. And of course, it's important to potentially do that. What about Bitcoin? A few people are sending me things saying, Tom, what do you think about this? Do you reckon it's turning into a Wyckoff? Well, here we have the idea of kind of like maybe that's a BC, maybe this is a UT with a UTAD or something like that over here, taking the high again. I understand what you're saying. If you kind of pose it like this, you could consider that. It's not really the way I would probably do these markets. Some people have even broken it down into here and considering that a little bit. We are through the trendline week, and I see the crypto markets like this. They are showing weakness at the right levels. Of course, if the stock market goes down, what's a critical point for Bitcoin? Somewhere around that 22,500. If it breaks underneath, where do we go? Well, it looks like we're going down to 20,750. It's the same thing on Ethereum. Ethereum is held very well, but this one here actually shows a head and shoulders pattern. So we're down and we're kind of looking now towards weakness. Do we go back and test just under 1,700? It looks like that's the play as long as the stock market also goes down. So all very critical levels here on the market. Look, guys, if you've been enjoying our content, also remember to subscribe, smash that like button, and of course, join us on the socials, Discord, our public community. They were sharing great stuff. There's always excellent information in there. At FX Evolution on, of course, Twitter. And if you're interested in the private community, free 7-day free trial in the links down description below. Thanks so much for the support. We'll see you in the next one. Bye for now.